what we've seen in Germany was pretty much expected. In other words, we would end up with the CDU, CSU winning the election in the sense that they've got more votes, greater share than anyone else, that they would then form a coalition government, probably with the Social Democrats, and that looks like it will be the case. And then the debate is about if other parties have to be involved and whether they can lift the cap in terms of government spending and debt, or budget deficit and debt. And so far, so good. I don't think there were any great surprises in all of this. The AfD did well, but only in line with the polling that we've been seeing in the run-up to the election at around 20%. And the CDU, CSU performed roughly as was expected as well. So no great surprises, but obviously a lot of uncertainty as they try and work out how the coalition will work. But it does seem that we are seeing a shift to the right in Germany, but it looks like it's going to be dominated, at least for the next few years, by the centre-right as opposed to the far-right. I think for investors, the key implication is that it probably reinforces expectations for more defence spending in Germany, and which some would see as a positive for overall growth in Germany and more broadly in Europe.
What about, Shane, g'day to you, it's Sam here, the dynamic between Germany, not to mention Europe, but the US and China, how, they're expected to sort of straddle both sides here because of the fact that, particularly Germany's auto sector is so deeply intertwined with the Chinese economy, particularly given, over the last year, we've sort of seen it as an outlier in, a lot of the pressure we've seen coming from Europe too on the tariff front.
Yeah, there's a lot of uncertainties out there regarding Germany. Its economy hasn't been performing very well for some time now. Huge vulnerabilities in terms of its auto sector, and it's not going to be smooth sailing going forward. So that does add to the uncertainty. That said, you could argue that European share markets have factored in that uncertainty. They've been relative underperformers for several years now. Price earnings multiples on Eurozone shares are sort of down around 15 times. In the US, they're 26, 27 times, so a lot more overvalued in the US than they are in Europe. In fact, in Europe, you could say they're around fair value. A lot of the uncertainty is already factored in. And then, of course, you've got the European Central Bank, which we think will ease probably 4 more times this year, and that has further to go. And in a general sense, you could argue that a lot of the bad news is factored in. The euro has been under pressure against the US dollar. That's another positive for European exports. But that's not to say it's going to be a smooth ride. All these issues are going to cause volatility, particularly around the tariffs. It's quite likely that the next round of tariffs will draw Europe in more significantly than what we've seen so far. So that's all going to cause a bit of a rough ride. But there are some arguments to be made here that the bad news has been factored in, so maybe it won't be as bad for Europe, and there's perhaps more vulnerabilities in the case of the US.